Hey, everybody. Welcome to the morning market briefing. It's Friday, August 28th, 2026. Hope you're doing well out there. Hope you got a great weekend lined up. We're not there yet, folks. Got a lot to get to. We got a big speech from Kevin Warsh at 10 a.m. We've got some earnings to discuss. We've got some economic revisions that we won't be able to comment on yet because they're coming out at 10. Let's start off, Ben, with Venezuela. They're thinking about leaving OPEC.
This was, I think in conjunction with the U.S. potentially taking a stake in the oil fields.
This seems like a logical step.
Yes. Yeah, I don't think they can be a member of OPEC and then the U.S. gets unfettered access to 17 oil fields.
Yep.
But essentially what's happened they were one of the 6 founding members of OPEC back 50 years ago or so. And then they just let their oil infrastructure go into shambles, and so they are really not even a rounding error anymore in terms of production. So they don't even have a quota. Like they don't have a production limit because everyone knows that they can't produce anything.
They're down 50% from 10 years ago.
Exactly. I mean, and the 10-year ago number wasn't even very high. It was like 2 million barrels a day. So now they're at 1 million barrels a day. They're actually up a little bit this year, but still not doing so well. So the U.S., I mean, as I mentioned, is looking at taking a stake in the oil fields. We don't know exactly what that would look like, but apparently this would be a massive deal. Everyone's talking about
the biggest deal.
It would be 17 or more than 17 of Venezuela's most promising oil and gas fields, covering potentially 90 billion barrels of proven reserves in the form of potentially a 100-year lease. So there's a lot of details that need to be worked out, but this would allow the United States to become a little bit more independent from Middle East oil.
It does make you wonder when do we get the fine print and the details of how this is structured? Is it joint ventures? Is it who's going to work these fields? Who's going to really upkeep the infrastructure? There's a lot of unknowns there, but certainly, I guess in some ways you wouldn't necessarily say this is real nearshoring, but it is nearer shoring.
Yeah, I mean, and I think that it enables more oil and gas infrastructure here in the West, in our hemisphere, kind of in the Americas. It allows for refineries either in Venezuela or Texas or wherever the offload would be. And I think that this all just translates to more abundant energy for the United States and Venezuela as well, because I think that the United States involvement with the technology and improved infrastructure and frankly capital will allow Venezuela to become a little bit more of a oil rich energy again, producer again.
52nd
state.
Yeah, after Canada.
I mean, it gets to the point too that Tom and I were talking about yesterday is how do you think creatively about some of these solutions so that you can create some win-win-win scenarios? We were talking about it specifically in the context of the pancreatic cancer drug, which I don't know if we've talked about on the call.
No, we may have talked about it when Merck reported it the day of.
No, so that was the
that wasn't Merck.
That was the personalized vaccine.
Oh, that's right. That's right.
But this company called Revolutionary Medicines is a $45 billion company. They have a pancreatic cancer pill that prolongs life dramatically,
significantly,
and it's really, really impressive. And we're reading through more of the research on it, and they just set the price on it. It's like $475,000. And Tom made the point of, we want to have the financial incentive in the drug development space, but at the same time, what amount is fair? And we even talked about potentially the U.S. government takes a golden share when it goes through the FDA approval process. Perhaps the U.S. government takes a golden share and provides a investment to further development, but then also has a seat on the board and makes it so that it doesn't cost $450,000, because $450,000 a year for this treatment, I mean, you need it, but it's going to cost the entire system.
Yep.
Yeah, because I was looking at the numbers on the pancreatic cancer, just the number of people who have it. and the average age. And so you're basically saying if you gave every single person who's been diagnosed with pancreatic cancer on an annual basis a drug, each one of them pays $500,000 a year for it. You're looking at $300 billion, which is basically like the entire value of, I don't know, Verizon, which they've, and like, how do you jibe that with like, how do we get that to a point where it's affordable for those who need it? Because obviously it seems to have efficacy and could extend life. The question is like, at what point can we get it to a point where it actually is feasible to pay for that? I mean, it's really.
What is the average age of onset? Do you know?
71. And so that's the thing is like.
I would imagine if you chart that relative to the average net worth at age 71, there's a very small portion of people that can pay for this.
Yeah, I mean,
very small.
There's an interesting. So I've done a lot of looking at this, and it started with a newspaper article. I think it was Wall Street Journal that wrote it when my dad died. He died at 70 and a half, like almost on the dot. And if you look at the actuarial tables, if you survive to older than 70 and a half, your odds of getting you basically like that's the cancer death window. Like you're either, if you live to be 65 and then you get cancer, odds are you're going to get to 70 and a half. If you get to 70 and a half without getting cancer, your odds of living to like 88 are like 90%. Which is really interesting, but like then that article came out and was like, hey, what's the average cancer age of someone with pancreatic cancer? Is 71, which totally lines up with the actuarial tables.
Yeah, because it's so quick.
Yeah, because it's one of those things. So it's like, it's just like it's a very quick, acting cancer. I mean, Patrick Swayze is probably the most famous person that got taken out by it. But I mean, it's an interesting thing because it's like, how do we? And I mean, it's sort of morbid, but like, what's the return on invested capital of spending $500,000 a year to get from 71 to 73, and how much is that going to end up being a burden on the system? And medical costs are already blowing up the U.S. Deficit. I mean, it's the fastest growing part of the deficit is healthcare. And so there's all these different things where we were talking about it, and it's an unsolvable question. It's a Gordian knot, if you will, a knot that can't be untied, which is like the incentives are so big to come up with a drug that you can sell to everyone that works, and then you're incentivized to maybe push something that doesn't work. Like we found out Tamiflu has been on the market for 20 years. Roche has made $20 billion, and it basically led to, they estimated, an excess of 100,000 deaths from the flu because they gave it to people and it made them worse. But they didn't know it made them worse because they didn't study it. They just wanted to get it out there, and so you end up with this it cuts from so many different ways where it's like this one might actually really work. But the problem is it's so prohibitively expensive that it would just be a massive drag on the system. But also this company's going to make a fortune. And it's like all these different things. And like, well, who pays for that? Is it worth it to pay for it? There's death involved. It just becomes this like just absolute terrible situation where the incentives are all backwards, and some of them are good, some of them are bad. How do you fix healthcare if you don't just make it a utility of some kind? But the problem is, then you get the United Healthcare situation where where they're just saying everyone's really sick so they can make more money. It's just it sucks, man.
It's quite the quagmire.
Yeah.
I want to come back to Warsh speaking and maybe kind of wrap up with that at the end. But Marvell down 8%, Ben. Not so good.
Yeah, there was a lot of hope and expectation that the new Google agreement was going to result in a higher revenue. And they basically said, well, Google might come in 2029, but might potentially start in 2029. That was a lot further out than anyone wanted. So Marvell's down. And it just kind of goes to show, I mean, just for the scale, I think people who might not be in the weeds hear of all these names. They hear Micron, they hear Marvell, they hear Broadcom. Just to give you a context on they hear AMD, the scale of Nvidia. Nvidia is going to do over $400 billion in revenue this year. It's going to do close to probably $700 or $800 billion next year. Marvell this year is going to do $12 billion in revenue. 12 compared to, 500.
It's crazy.
And by the way, Nvidia is growing at, 70, 80, 90% year over year. and Marvell's growing at 50%. And the numbers aren't too dissimilar when you compare it to Broadcom. Broadcom's larger. They're about a $100 billion business. But again, they're growing about 50%, where Nvidia is doubling every year. And Broadcom's growing at half that pace. Phenomenal growth. Great company. But not in the league of Nvidia. And then AMD is smaller still. So I just wanted to kind of put that out there, because I think a lot of people say, well, what's the next Nvidia? And right now there's only one Nvidia. It would be like saying, what's the next Apple?
Nvidia is the next Nvidia.
Right.
What's the next United States? Yeah, right.
You wish, bro.
But I think that scale is important. And that's one of the reasons that we emphasize Nvidia so much in client portfolios, not even withstanding the fact that it's higher in the S&P 500, but also because it is the leader. That's why it's a larger percentage of client portfolios than Marvell, which we really don't even own, or even Broadcom.
Warsh speaking today at 10 a.m., Tom, from the hole. How we feeling? What's he going to say? Either of you guys have a good lean? I know, Ben, you were seeing some traction on X, formerly Twitter, of speculation about what he might say, but what are you guys thinking?
I think the general body of the talk is going to be very similar, or at least is going to. It seems like Kevin Warsh is building on things, which he's letting a little bit out, and then the next one he's building a little bit more. The most recent press conference he had, it talked about how they're looking at the big questions, and the big questions, how are we attacking inflation? How is interest rate policy effective? How is it not? Are we too restrictive? Is inflation measured correctly? So what I expect him to do, and this is sort of the chatter I'm seeing, is that he's going to, quote, frame the big questions, which is continue to build out the concept of how he's going about changing the way the Fed works. And I think it's actually a pretty interesting plan. The more I think about how he's operating, it's like everyone expected him to come in and be like, I'm Kevin Warsh, I'm going to cut rates, I'm going to do all this stuff. But I think that's actually too aggressive. And so what he's doing is he's building. He's like putting a little bit out there. It's like you start to titrate up. You get a little bit of a dose, and you let that kind of settle, and then you get a little bit of a bigger dose, and then you kind of get used to it. And now he's going to give us an even bigger dose of, hey, and my guess would be inflation is incorrectly calculated. We really need to be smart about it. These things, AI, Middle East, all these different things are causing short-term problems, but does that mean we need to be reactive? So I think it's going to be all about, we're the task force, I think, is actually kind of it's almost a useful tool where he's like, I'm not making these decisions. He is.
And he's buying time.
Yeah, and he's buying time, which is that, like, I've got 6 months. We're going to let the task force do their thing. And guess what? They're going to show exactly what I'm saying now, and I've started peppering into these conversations are where I'm headed. So I think that's the game plan. But I think that Jackson Hole is going to be the next dose where we're working up to being, we're working our way off of heroin and onto, I don't know, methadone or something. There's going to be a little bit less euphoria, but we still need the Fed to be operating and moving money around to necessitate economic activity, but we can't get that high off it anymore.
I mean, I liken it in some ways. This is off the top of the head of analogy, and it probably won't work. But there's times at my house where it's dinner time, and I'm looking around. I'm like, what do we have? What are the ingredients we have? What I'm balancing. What will my children eat? What would my wife and I like to eat? What those aren't always exactly the same things, but I'm looking at a pool of ingredients that we have. And I'm slowly narrowing in, okay, I'm going to get some chicken going. What are we going to put with the chicken? We're going to figure this out. I think so much of the pushback right now is that the commentary, the columnists, the analysts, the professional investor class, all of these people are playing the role of Martin Hall, the Mart dog, walking in the kitchen as a 7-year-old boy and being like, I want a hot dog. And it's like, guess what, buddy? We don't have any hot dogs. We're figuring this out. Well, what do we have? I don't know. We're going to have chicken with something. Give me a minute. And the impatience that's there, but it's like, what am I? I am reacting to the conditions that exist between our pantry and our refrigerator. And I'm not going to leave and go get a hot dog and intervene to that level. I'm not going to order food and have it delivered here so that you can have a hot dog. We're going to have pasta and chicken.
Yeah. Kevin Warsh is a hostage negotiator. Right
and people just do not like that. Tim Rouse wants to walk in and get a hot dog, and that's just not the reality. He's probably not a hot dog guy. He wants to walk in and get a pile of lettuce,
a vegan wrap of some kind.
Yeah, with Impossible Burger.
Yeah,
but I think people are really having a hard time with that.
I bet he consumes above the average per capita amount of oat milk, if I had to guess.
No doubt.
The one thing to kind of piggybacking on that, Andrew, that I've observed with Kevin Warsh is that I think that it's not going to be studied, but I think that this would be a great case study for MBA classes in leadership, because so many times you have someone new come in to an existing organization. Imagine a very flat organization, but you're supposed to be the head of it, and you don't have any authority to get rid of anyone, which is usually like the first thing that you do. You get your team in. I mean, that's what every presidential imagine a presidential administration.
We're going to keep the cabinet.
Yeah. We're going to keep Kamala Harris.
But you're supposed to be the leader, and yet you want to change the culture and have a different way of doing things. And I think he's going about it in a very smart way. And he's allowing people to disagree with him. But while he at the same time, he is building his case slowly while everyone else is chirping. He's continuing to build this case so that it becomes almost inarguable. And I think he's doing a very good job about that. Well, I mean, the proof will be in the pudding.
Yep.
But right now, I think the early indications are good.
Yeah. He's doing it big time. Look at the hand. Look at the hand. Look at the hand.
Yeah.
All right, show's over, and now he's got your wallet,
We'll continue to monitor. I mean, I think those who have been listeners long enough, I think would agree that we're relatively even-handed in our criticism of Fed chairs. And at this point, we certainly are cognizant and recognize that we have a very different view of Warsh and what he is doing, how he's operating, how he's transitioning to this role, to your point, what he's looking at, to your point, Tom. And we're in favor of it. Are we saying it will definitely work? No.
Yeah.
We'll see, but I don't have a problem with it so far. I'm very curious to see. We'll get the payroll revisions coming through at 10. So we'll talk about that, I'm sure, probably pretty early in the call on Monday.
What are the odds that by the time he finishes his speech, the 30
is
at $4.99?
Yeah.
I do have some handicapping tips for Kalshi.
Oh, here we
go.
Some
thoughts.
Let's go.
I've looked through the options for what will Kevin Warsh say during his Jackson Hole remarks. A lot of people betting on inflation, forward guidance, price stability. I mean, these are all, if you want to pay $1 to win 5 cents,
have at it.
Go for it. I'm more of a value investor. So these are my deep value recommendations. These are two bets that I've made. This is not investment advice, to be clear. This is
just for fun.
Yeah,
entertainment.
We're just goofing around. But Good Day is sitting at a 24%. He said good day every time he's approached the microphone thus far in his Fed chair career. I think that's a great one at 25% chance. Also, Iran/Middle East, only 17%. He's going to have to talk about oil. Oil is also on there. It's way on the list, but I think you can't talk about both of them without hitting those. I think 2008/financial crisis at 48% is probably a no in my mind, but I think it's too high, too overvalued. So, take a look at there. There's some interesting things. Gold is on there. I think that's unlikely. I think it's very unlikely. The least two ultra value bets, like deep, bets would be Trump and Powell. I don't think he would.
He's certainly not going to say Powell.
Not in his prepared remarks at all.
And there is no Q&A, is there?
I don't think so.
I'm not certain. I don't think so. So, but I would say, good value bets. I put $5 on Good Day. I put $5 on Iran/Middle East. I would say that there's a fair chance that Iran is going to be far more of a dark horse, but Good Day, I think, that's how he's begun every one of them. I mean, listen, you got to play the probabilities here.
Yeah. All right, good stuff. We'll wrap it up there. Next week, we got plenty to talk about. We'll get ISM manufacturing on Tuesday. We'll get ADP employment on Wednesday. We'll get Costco monthly sales. We'll get Broadcom earnings, Lulu earnings, ISM services, and a new BLS employment report that will be framed by all the many of jobs that were not created previously. So lots to look forward to. Hope you guys have a great weekend. Talk to you soon.